Ladies and gentlemen, good day and welcome to Styrenix Performance Materials Limited conference call. From the management team, we have with us Mr. Rahul Agrawal, Managing Director, Mr. Bhupesh P. Porwal, Chief Financial Officer, and Mr. Chintan Doshi, Manager, Legal and Company Secretary. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Further, on behalf of the management of the company, we would also like to remind the participants that this call is being conducted subject to and in line with the disclaimer mentioned in the investor's presentation as is available on the stock exchanges. I now hand the conference over to Mr. Bhupesh P. Porwal. Thank you, and over to you, sir.
Yeah, thank you very much. Ladies and gentlemen, namaste and good afternoon, everyone. I am pleased to welcome you to our Q1 Financial Year 2025 conference call. As we reflect on our performance in fiscal year 2024, I am delighted to announce that we have witnessed a robust demand for our products, marking a significant growth trend. We are on schedule of our debottlenecking and expansion projects announced in previous year. Coming to the financial performance, the highlights are as under. Sales volume has increased by 8.6% compared to Q4 of FY24 and by 21% compared to Q1 FY24. Revenue increased by 16.7% compared to Q4 FY24 and 28.5% compared to Q1 FY24. PBDIT stood at 13.1%, which is better by 0.7% compared to Q4 FY24 and 3.7% better compared to Q1 FY23. Profit after tax stood at 8.7%, which is better by 0.5% compared to Q4 FY24 and better by 2.8% compared to Q1 FY24. These are all about the highlights of this quarter, and now we may proceed to answer the questions you may have. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking your question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Nirav Jamuria from Annual Research. Please go ahead.
Yeah, good afternoon, sir, and congratulations for a great set. So I have 2-3 questions to ask. So the first is on our ABS. So if you can just help us understand how were the imports of ABS in India in first quarter of FY25 vis-a-vis last year and 4Q of FY24. If you can just share the trend.
Okay. Hi, Nirav. So, in terms of imports for this quarter, we don't have that complete data yet because, as you know, specifically for the month of June, the import data would be really available to us only by early August. However, as far as imports are concerned, year on year, there doesn't seem to be any major shift or any major, change over there. We have got some share of that import, obviously, as our volumes have increased, but overall, the imports are more or less stable, if I must say.
Correct. So the reason for asking the question was because there were a lot of challenges in terms of container shortages globally, and even freight cost was elevated. So I was trying to understand that whether this has helped us to put some additional volumes and gain those volume share in the domestic market, and whether if you can also explain that whether these gross margins which we have reported this quarter include some element of those higher freight costs which would have elevated the domestic prices of ABS.
We have seen the impact of ocean freight. So, ocean freight impacts us in 2 ways. There is bulk ocean freight, which is impacted on our raw materials, which comes in by way of styrene and acrylonitrile. And there's, of course, ocean freight involving, containerized movement of finished goods, which comes into the country. If we look at, bulk freight, actually, there was a mismatch towards the end of the last quarter and early part of this quarter, where a lot of our material, in fact, got delayed. And due to that, we, in fact, had to even buy some material in the spot market because we didn't have the availability of raw material coming in at that time. So, in fact, that was a bit of a negative, if you will, because we had to buy some material when that material did not come in on time. Overall, not a major impact, but some impact was there. In terms of finished goods coming in terms of the shortages of freight vessels, that is happening more so in this quarter as opposed to the last quarter. So there is not a major gap there. I mean, if you look at our overall EBITDA margin, that hasn't changed much, right? Even kind of quarter on quarter. So that's very similar. It's just that our volumes have increased, and that is purely a function of us being able to produce more and sell more.
Correct. So second question is in terms of our sales volume for ABS. So I just wanted to understand from you, like, do we sell more of those colored ABS and the compounds of ABS as against those white or the black master batches which are coming to India? And when we generally say that 65% of our sales volume for the ABS are of specialty grade, does this include those colored ABS and the compounds which we sell to the customers here?
So, when we talk about specialty ABS, it does include some of the colored grades, but not all colored grades. There are some colored grades which would be more along the lines of the, standard grades of products that we supply in the market. So, it's difficult to give that exact breakup over here during this call. But there would be, like I said, some component of the natural grades of products or the base grades, which would be in, the 35%, or actually that number is even lower. And that would also consist of some colored products, but not all colored products. We determine the specialty of the product based on the complexity in manufacturing it, as well as the value addition while selling the product.
Correct. And the imports which are coming to India is predominantly those white or the black black ABS and not the colored ones which we generally sell, right?
Not really. So the product that comes into the country is a full spectrum. So there are products which come in on the natural side as well as on the specialty side. So the percentage of natural ABS might be a little bit higher coming in from outside the country, but there is also a significant percentage of specialty ABS or colored ABS, if you will, which is sold in the country from outside.
Got it, sir. The last from my side is, if you can just help us out in terms of both for ABS as well as PS, the split of volumes between, let's say, for ABS, predominantly auto and consumer durables, and for PS, let's say, for auto, consumer durables, as well as the stationary products.
In PS, there is no sale to automotive.
Yeah. Okay, so it's more of consumer durables and the stationary ones.
And packaging. Like I mentioned in my previous calls, in ABS, the automotive and household appliances are the larger markets that we cater to, followed by electronics, then medical devices and toys, stationery, things like that. And in case of polystyrene, it is household appliances again, which is an overlap with our ABS business, and there is some packaging, which is also a significant business, and then followed by the other segments that we cater to.
Got it. Just to reconfirm, sir, the timeline for the commissioning of our debottlenecking, like last time you mentioned, it could be coming in H2 of FY25. So just to reconfirm that, and the volume guidance, what you said earlier, just to reconfirm, if you can just share both of them. Thank you.
So, if you look at our overall volumes that we have done in the first quarter, it's close to 48,000 tons.
Yeah.
As opposed to last year, we did about 39 or 40,000 tons in the first quarter of the year last year. So that's about a 20% increase. This incorporates obviously the debottlenecking which has happened over the course of last year as well as beginning of this year, this financial year. As we go along, that is on track, and we will have additional volumes coming in the second and the third quarters as well. overall, I think our volume guidance that we had given in the earlier presentation of about a 15 to 20% growth over the previous year, that continues to be the case.
Thank you so much, sir, and wish you all the best.
Thank you.
Thank you. Next question is from the line of Rahul Agarwal from IKI GAI Asset Management. Please go ahead.
Yeah, hi. Good afternoon, sir. Thank you for the opportunity and congratulations for the result. Firstly, as you alluded to the sales volume outlook, just wanted to add a bit here. So obviously, it implies that there is some bit of debottlenecking which would also happen going into second and third quarter. Is that correct?
That is correct.
Okay. So broadly, 15-20% is a consolidated guidance, which includes ABS and PS both, right?
That is correct.
Okay, perfect. Any thoughts or any comment you would like to share on the EBITDA spreads we are making on both businesses for fiscal 25 and 26, please?
No, we are not given any guidance as such. We have iterated in the past as well that the company has undertaken projects to increase capacities, both by way of debottlenecking and brownfield expansion. Also, there is cost rationalization measures that the company is undertaking in terms of improving efficiencies. And last but not least, trying to increase the share of value-added products, be it by way of the existing product line or the new products that we have launched in the brand of Styroloy and Acelac. So, combination of all these three would help us, in achieving better numbers going forward, but we have as such no guidance towards that.
Got it. And could you specify a bit more on what kind of new products have been launched at least this year, like whatever you've sold in 1Q? Could you highlight a bit more on that, please?
So the volumes currently sold are not very significant. They are still kind of small in relative terms compared to the rest of the business that we are in. The products that we have launched right now, we have launched Styroloy, like I mentioned, and Acelac, which are the two brand names. Under Styroloy, we are doing blends like polycarbonate ABS, nylon ABS, ABS PMMA, HIPS PPO, other products. In case of Acelac, it's ASA, which is a kind of weatherable product which works, in applications where high weather resistance is required, or weatherability is required, or high UV resistance is required. So we have done that, as well as blends of ASA, which would be again ASA, PMMA, and so on and so forth.
Got it. Perfect. And one question was on the working capital this quarter. Like, how did June end? Broadly similar to what March was, 50-55 days. Could you highlight what was the operating cash flow for the quarter?
This is not some information that we generally publish, but so.
Okay, no problem. And lastly, just on the CapEx, could you guide us for the amount of CapEx to be done for fiscal 25 and 26, please?
So currently, the overall CapEx for the whole year that we estimated would be, the tune of 60 to 70 crores. That number will be fine-tuned actually in the successive next few months, because we will have complete clarity once our engineering studies are completed, and to what extent we can accelerate, the expansion projects, and perhaps would also reflect on the CapEx accordingly. So I think by the next investor call, we'll have more information to share.
Okay. Thank you so much for answering my questions. I'll get back in with you.
Sure.
Thank you. Next question is from the line of Priyank Chheda from Vallum Capital. Please go ahead.
Hi, sir. Congratulations for great set of numbers. So my question is on, could you elaborate what would be the contribution of sand in this total 48,000 tons volume for this quarter? I believe it's also part of when you disclose 48,000 tons, it includes sand plus PS plus ABS, correct?
That is correct.
Would you be able to discuss how much of the sand would be sold in this contribution in this total volumes?
Again, we don't share individual numbers or breakup. We stop disclosing those exact details, in competitive interests. But it is more or less in line with the numbers that we have been doing over the years. and there is not any significant change in that.
Oh, okay. Okay, perfect. All right. So the incremental volumes have come from the debottlenecking of ABS and PS put together in that ratio, right?
Yeah. I mean, like I said, the product mix has not changed drastically across the board, and debottlenecking would have benefited all products.
Okay, perfect. Coming to just a delta spread, so we have seen slight improvement in ABS prices, maybe because of the ocean freight of the finished goods that you alluded to. While, the styrene monomer raw material has also moved in tandem. So do you see some global dislodgement in the delta spreads ahead? Any global development which you would like to highlight, maybe which we should think of in case which can impact the spreads ahead?
So the global spreads have not changed much in the last, kind of 1.5 years since we have taken over management control. I think barring the first quarter of, 20 to 23, when the spreads were a little bit higher, they kind of normalized post that. And they have stayed at a normalized level. Now I'm talking from a global perspective, and that continues to be the case today. So there is no major change from that. I think in terms of our own performance, of course, we are benefiting, slightly from some operating leverage as our volumes are going up, and with the total sales that we have been able to achieve of different categories of products.
Oh, great. Just last question on the power and fuel cost savings which you had alluded last quarter, plus some reduction in the steam cost. In Q1 at least we could see that there is a rupee improvement in on a per kilo basis. Of course, it has to do with the operating leverage too. Can you elaborate for us what should be the total cost savings that we should think of when it comes to FY25 in terms of power and fuel, and what can be the logistics cost saving that we should see in the forthcoming year?
So in terms of power and fuel, when we discuss about fuel, there are some projects that are ongoing where we are looking at more cost-effective and economic sources of generating steam across all our plants. In one of the plants that has already been commissioned, and in the second plant also it's near commissioning stage. The third plant also, we would have that commissioned probably in the next quarter or so. So I think over the course of this year, there will be some savings in fuel. Of the total savings that we are anticipating, at least 30 to 40% of the total savings will come this year, and the entire savings will be visible next year. As far as power cost is concerned, we are evaluating, different options, for which again, we haven't yet come out with a kind of declaration to the public market, which we will give very soon once we have that information on what we intend to do. That power saving will also come in full force next year, and for this year, I think probably towards the end of the year.
Okay. All right.
Yeah.
Thank you.
Sure.
Thank you. Next question is from the line of Akshada Dave from Vivog Commercial. Please go ahead.
Hello. I have two questions for the management. Could you release the previous 4-year volume data from FY19 to 22? I understand you were not the management at the time, but do you still have that data?
So earlier we have been not publishing those data in last few years. So, and previous years we have published the production volume data. So what exactly you want, if you can write to secshare@styrenix.com, we'll revert back to you on that.
Okay.
Yeah.
Okay. My next question was, the promoters have recently released almost 20% pledge on their holding. Are there any more plans for rest of the pledge to be released as well?
Well, if you check the updates on the stock exchange, we have already informed that the entire pledge has been released. So there is no more pledge existing on any of the promoter shareholding.
Okay, that's great clarification. And I just wanted to confirm the debottlenecking project was the same project that you've given to Mott MacDonald. Is that right?
No, that is a brownfield expansion project.
So has that started? Because this was given in February with a 6 month to start renewal, right?
So typically what happens, ma'am, when we do any project, we have to do a basic and detailed engineering study. Mott MacDonald has been awarded the basic engineering work, which is due to get completed very soon. And that's when I said we will have a better idea of exactly what the capex will be for that project. So that work is still ongoing and due to get completed very, very soon.
Okay. Okay. Thank you so much. I'll get back in the queue.
Yeah. Thank you.
Thank you. Next question is from the line of Ranbir Singh from Yashvi Securities. Please go ahead.
Yeah. Hi, Rahulji. Congratulations on a great set of numbers. While I was trying to calculate realization, so basically for the last quarter's volume, this quarter you reported that you did 44,094 metric tons last quarter, but in the last quarter's investor presentation, it was 44,538. So which would be the right number to take to calculate the realization?
So I think last quarter up till last quarter we have been publishing production numbers. So that is the production number, and this time we have published the sales number. I think last quarter also was the sales number. Up till December we were publishing the production number. So that's the reason.
Yeah, that's right.
Yeah.
Okay. So I had a question. So Rahulji, what I observed that realizations have increased 7% quarter on quarter. So is this due to the base commodity price increase which happened in March 24, which led to better realization of existing inventory, or was it due to a better product mix?
Realizations have increased 7%.
So realizations.
Yeah. So it would largely be a function of product mix. As you know, the product mix changes quarter on quarter. All right. And that's why I've always guided that one should look at one should look at annual kind of data to get a blended idea of what those realizations would be, because it's possible that certain grades of products sell in higher volumes in certain quarters vis-a-vis in other quarters. So this is more or less in line with what we would have expected for the kind of products to be sold in this quarter.
Okay. So I have another question. Like we have a listed competitor who's producing ABS. Their realization were a little higher than ours. So ours is lesser mainly because of the product mix, because we also produce polystyrene and that is sold at a lower cost. Is my understanding correct?
Yeah, broadly you are correct. So we also sell more SAN and we also sell more polystyrene. And the spreads between ABS, SAN and polystyrene all are different in the industry. And what we normally publish is a blended or a overall result, which is different from what the competitors would be publishing.
Okay, Rahul. Thank you so much. Great going. Thank you so much.
Thank you.
Thank you very much. Next question is from the line of Tej from Nivesha Investment Advisory. Please go ahead.
Hello. Yeah, thank you so much for the opportunity. So I have a couple of questions. So taking it from the previous participants, you said our realization has increased because of the change in the product mix. But is there a factor of freight cost leading to this increase in realizations? I mean, there would be. Yeah.
So this question has been asked earlier. So I think in the last quarter there is no real impact of the freight costs. So ultimately that impact may come, but as of now we don't see it in the last.
Okay. Got it. And sir, again, sir, just a confirmation on a previous participant question. So you said that the global spreads, and the spreads for you two haven't changed, upwards. Let's say on an upward trajectory, it's at normal level only, right? And you expect it to remain same going further, if I'm not wrong.
So this is the current understanding we have. Of course, it can change from time to time, but as of what we, as a management, believe to be the case today, and in the near-term future, that indeed seems to be the case.
Got it. Okay, got it, sir. No problem. Thank you. That's all from my side.
Sure.
Thank you. Next question is from line of Dattatreya Chitnis, individual investor. Please go ahead.
Hello, good afternoon, sir.
Yes, sir.
I am audible, sir?
Yes, sir, you are.
Good afternoon to you and all the participants. I don't have, but just compliments, sir. My immense gratitude to you and the board for the bountiful dividend. The performance of the company is highly commendable. The management of the company is immensely reliable, and the dividend policy is just incredible. The board deserves kudos and admiration for adopting the most equitable and fair business practice towards all stakeholders, which is very rare in the domain of listed Indian corporates. I am sure that you can see only such approach towards stakeholders among only multinational companies like Nestle, Colgate, Procter & Gamble, to name few. Thank you, sir, once again, and thank you to convey my thanks to the board, please.
Will do, sir. Thank you for your appreciation, sir. Appreciate your kind words.
You're welcome, sir.
Thank you very much. Next question is from the line of Ashish from InvestQ Investment Advisors. Please go ahead.
Yeah. So, sir, if I recollect the last call, you guided that the EBITDA margin of around 12% was a base and you will build up from there probably. So that's what we could understand. But historically, we've seen that given the nature of your business, the margins have, both on gross and EBITDA, they've been pretty volatile over years. So what changes for the company now that those bad days won't come back, as in those 12% margins would be the base for the company? I just wanted to understand that. Is there anything changes between you and your customers in terms of contractual arrangements or some inventory policy? Just your clarifications would help with.
So generally, we don't give guidance on EBITDA percentage margins. What we have stated in the past is that post the 2 years of exceptional results during global supply chain disruptions, after that things have normalized, and in a normalized scenario, what we are seeing in the industry today with all factors in play is something that is sustainable, is what we have stated in the past, and we continue to state the same. In terms of margins, generally the businesses work in terms of spreads, whether it is ABS, polystyrene or SAN. Those spreads have remained sort of consistent. Some improvements we have seen, marginal improvements as we, like I said, augment our capacities, get some operating leverage. We reduce our costs in some areas that we have already mentioned, and we improve our product mix. So with these three factors and three levers that we have, we try to do whatever best we can in terms of the margin profile. In terms of EBITDA percentages, it can change, because if your raw material prices go up, typically our finished product prices go up, and there the EBITDA margins might look a little bit lower. And conversely, if your finished raw material prices come down, your finished product prices also come down, where your EBITDA margins look higher. So I think in terms of absolute profitability, based on the sales volumes that we do, would be a good metric for you to understand how the business works. And we believe it's sustainable at where we are at, with a continued effort to improve it going forward.
So maybe per kg or per ton metric, is that not going to be as volatile on those matrices versus a percentage margin? That's what you're asking.
Correct.
But sir, there have been years when I can see history where the absolute profitability of the business has gone down substantially. So I don't have the numbers to go on the per ton basis how the profitability went. But you may not be the management that time, but maybe I think 10-15 crores was the EBITDA in one of the years. So that which was pretty deep in terms of negatives. So you don't see such scenarios happening in this business now?